Good evening, my name is Sebastian. Today, Richard, Craig and myself would like to discuss our long-short strategy based on our identification of a variable that may affect the market. Our thesis is that NVIDIA's AI H100 chips have been observed to overheat frequently early during their life cycle. We speculate that further stress and deep into its life cycle, it will completely malfunction. These assumptions will lead us to shorting NVIDIA and longing AMD. Our model indicates that NVIDIA's share price will plummet from $116 all the way down to $2, a fall of 98%, whilst AMD's share price will rise from $156 to $914, a tremendous growth of 487%. These prices will reflect the market's trust and satisfaction of each organization's chips, reliability, safety, and long-term potential and optimism. Macroeconomic factors that drive our model and valuations are, firstly, the AI chip market is expected to be valued at $53.7 billion in 2025. It is set to grow over $71 billion in 2026. Additionally, it's expected to have a compounding annual growth rate of between 30 to 38% from 2024 to 2033. This rapid growth is indicated by the huge spending and investment in AI chips globally. Secondly, NVIDIA is one of the largest suppliers of AI chips globally, conglomerates such as Amazon, Meta, Microsoft, Google, and Oracle just being a few. When these large corporations come to the realization that some of their core and critical AI systems may be compromised due to NVIDIA chips, they'll look for alternatives such as AMD. As an extension, individual users will be unsatisfied that the promises of NVIDIA fell short and will look for alternatives. An additional factor to consider is the supply and demand. As NVIDIA has a current market share of over 80%, there will be a large hole in the market for competitors such as AMD to take advantage of. As NVIDIA patched the problem, users will move to more readily available options, and due to an already high demand market lacking even more supply, the demand will drive up prices, leaving companies such as AMD hugely profitable. I'll pass you on to Richard to speak on NVIDIA.
Hi, my name is Richard and I'll be presenting the augmented valuation of NVIDIA following the shock event. As you can see, as a result of the shock, NVIDIA has seen a 17% negative sales growth. To get a share price value, we use a WACC of 22.22%, a new beta of 4, cost of equity of 25.84%, a cost of debt of 5.5%, and a terminal growth rate of negative 3%. Estimated share price that is calculated is $2.12 per share, with an upside to valuation of negative 98.18% from the previous share price of $116 per share. Next, we talk about the firm free cash flow of NVIDIA. As a result of the inability of NVIDIA's quality assurance and R&D team to spot and identify issues with their chips, led to massive failure and a decrease in trust with the company. As NVIDIA has about 60% proportion of revenue dedicated to the AI sector, the ripple effect of the news shocked investors so much that they lost trust in other segments of companies' products, such as the gaming GPUs. NVIDIA's net income did not even break $8 million USD. This can be considered a catastrophe. Depreciation and amortization slows down as they attempt to salvage their losses by selling PPE, along with the reduction in change in working capital, as creditors are now quickly coming to collect payment in view of the fact of the huge risk increase in the company. NVIDIA experiences a hefty increase in beta, reflecting the new risk the company possesses, a negative terminal growth rate of negative 3%. As their risk spikes, they become much slower on their debt payments, reducing their corporation's bond rating to something much lower than BBB, resulting in an increase in cost of debt to 5.5%. These factors, which make up WACC, massively boost it, which consequently reduces NVIDIA's firm free cash flow.
Hi, my name is Craig and today I'll be focusing on AMD's performance and how it stands to benefit from recent developments surrounding NVIDIA's H100 chip. As a direct competitor in the AI chip market, AMD's share price is poised for a significant boost due to this disruption. With NVIDIA now facing these challenges, AMD is now in a position to substantially increase its market share. Our analysis shows that AMD's market share jumped from 6.3% to 32.2%. This gain comes as customers shift their demand towards AMD's chips, which are viewed as a viable alternative for AI needs. As AMD gains this market share, it leads to a substantial increase in its revenue. Before the news, AMD's MI300 series was projected to bring in $4.5 billion in 2024. After the event, the revenue is expected to increase an additional $18.42 billion. This revenue boost is a clear indicator of how AMD's products are stepping up to fill the gap in the market. As AMD's revenue strengthens, so does its valuation. Based on our DCF analysis, AMD's enterprise value is set to rise considerably. The estimated share price jumps to $915 from its current level of $156, representing a potential upside of 487%. In our sensitivity analysis, the results were consistent in every scenario. AMD's estimated share price exceeds the current price despite considerable changes to its WACC and growth rates. This analysis reinforces the idea that AMD presents a strong buying opportunity.